In a closely watched speech during a Wall Street Journal webinar, Federal Reserve Chairman Jerome Powell said that the bond market sell-off of the past few weeks has caught his attention, and the central bank would not sit back and let the financial market conditions tighten broadly. However, Powell took no concrete steps, and stocks sank and long-term Treasury yields spiked in the wake of his remarks. The statements made by Powell were a change from last week, where the Federal Reserve Chairman said he welcomed rising long-term bond yields. The Fed has repeatedly said it will keep short-term rates anchored near zero and continue its monthly bond buying program until it sees not only a low unemployment rate, but also a job recovery that is inclusive across income, gender, and racial lines.
I laid out the conditions upon which we would consider raising interest rates, and that's labor market conditions that are consistent with maximum employment, which is, that's a big thing to get to, and it will take some time to get there, right? Inflation sustainably at 2% and inflation on track to run moderately above 2% for some time. So those are the conditions. When they arrive, we will consider raising interest rates. We're not intending to raise interest rates until we see those conditions fulfilled.
The Fed likes inflation to run around 2%, a rate it believes signals a healthy economy and provides some room to cut interest rates during times of crisis. However, the rate has run below that for most of the past decade, and inflation has been particularly weak during the coronavirus pandemic.
Compared to the economic scenarios that we were contemplating a year ago, this is, it's good to be where we are, and particularly with the vaccines now. No one thought we'd have vaccines within a year, less than a year. And now vaccination is moving at a good pace. We really are looking, if we can just decisively end the pandemic, we could get back to normal and avoid a lot of the longer-term damage.
However, some economists have worried that the Fed's commitment to low rates will foster inflation. But Powell insisted that raising interest rates would require the economy to get back to full employment and inflation to hit a sustainable level above 2%. He doesn't expect either to happen this year, although he admitted that inflation is likely to rise as the economy recovers, but he added he thinks it will be just temporary. Without durable inflation and a return to full employment, the central bank is unlikely to raise interest rates. Bond yield climbed as Powell spoke, while the market looked for more reassuring comments on future policy. Dalia Alkomi reporting for Business Review, Kuwait Television, Washington. The Business Review brings you top financial news developments influencing financial markets, international currencies, commodities, global commerce, tourism, and other economic events from around the globe. This brings us to the end of this episode of Business Review. We hope to see you again tomorrow with news of stock markets, economic conferences, commodities, currencies, regional and international financial news, and much more.